It seems to me what occurred was that the world realised that the bankers have them by the short and curlies, and nothing you can do about it. Really, just got to bail out the bankers continually in order to preserve the world economy.
And it hasn't worked. I mean, you look at Thomas Piketty, and we've talked about the 1%, and in fact, it turns out it's the 0.1%.
Well, it depends.
Who's made all the money? They're the bankers who've reinvested,
right? It depends what you're trying to achieve. I mean, the central banks have a dual mandate: low inflation, lower unemployment. So they're beginning to achieve that in America. As the World Bank said last week, the world economy is running on one engine, which is the United States. The United States is the key money printer of the world. So you've got to say, well, actually, maybe to that extent it's worked. On the other hand, it's been tremendously expensive in terms of moral hazard, and as you say, has exacerbated inequality. So, you know, the central bankers aren't worried about what Thomas Piketty's on about. They don't care. It's fine.
And we have the issue where, of course, at some point it has to be unwound, but that seems to be a long way down the track now.
Sure. It's worth bearing in mind that the central bank, the Fed in particular, but now the ECB is going to be buying bonds. They are an arm of government. It's basically a buyback scheme. So they could easily cancel them.
The other bit that you wrote about, which is fascinating, of course, is that poor old Switzerland, who runs around with balanced budgets and all that kind of stuff, is actually being punished by the global markets now for doing the right thing.
Well, it's worth bearing in mind that the reason that Switzerland is in this pickle is because the bankers want to give them money. The money is pouring into Switzerland, driving up the Swiss franc. That's the problem. And that's what they identified and tried to deal with 3 years ago by setting the peg and buying euros. Obviously, it got too much for them. They can't actually pay for it anymore. But it is very ironic that the people who are causing the problem in Europe and the ones that are broke, they're the ones who are causing the problems in Switzerland. That's the bankers, by pouring money into the place and driving up the currency. Why do they do that? Because Switzerland runs a current account surplus, budget deficit, no debt, hard money, all those traditional values that the ECB is abandoning in order to please the bankers. I mean, it's a bit ironic.
And poor old Switzerland, of course, which derives 70% of its GDP from exports, is now looking at almost killing off its export market overnight.
Well, yes, but the thing is that Switzerland, and like everybody really, is in favour of a free market. I mean, the currency should be set by the market. They can't. Not only is it not sustainable to have a peg currency, it's not the right thing to do. And so, yes, Switzerland is going to suffer some pain, partly because of a 20% devaluation overnight, which is, or within minutes, is what they had. But if that had happened gradually, that's life. That's what happens. So yeah, I mean, look, Switzerland is in for some pain. It's kind of their version of Dutch disease, and we have had the same thing. Currency's falling again. That's what's happening now to us.
And that's the next question, of course, is given that the euro is going to drop because of QE, that means the Australian dollar is likely to go back up again. Does that mean that the Dutch disease that we were facing in terms of having our export industry really squeezed is going to keep going?
I think the Australian dollar will continue to fall. I mean, obviously it might not fall against the euro, so therefore, on a trade-weighted index basis, the decline in the Australian dollar will be muted to some extent. But we remain primarily a US dollar currency. So I mean, I think that the Australian dollar will continue to fall because the US dollar is going nowhere but upwards, and also commodities are going nowhere but downwards. And so I don't think there's too much to worry about there. Although 70 cents on the Australian dollar might be difficult to achieve. I think maybe 75 within 12 months is possible.
Well, better than the poor old Swiss who are looking at a very challenging currency situation in detail. And Cola, thanks very much.
Thank you.